Pratt and LeFevre's Own Nothing, Control Everything strategy is vital to entrepreneurs and small businesses who work with the public and want to increase their liability protection and available tax benefits. The first layer in this protective strategy is a corporation, which will have one shareholder, the trust, 3 board members, of which the client is chairman, and 3 officers, a CEO, president, and secretary. The trust I mentioned is going to be either revocable or irrevocable. Revocable is often referred to as living and is more flexible, where an irrevocable is less flexible but offers more protection in the case of a lawsuit. In conjunction with the trust, we advise a pour-over will, which allows ownership to transfer uninterrupted in the unfortunate case of a client's death. Pratt and LeFevre Corporation designed this strategy to ensure our client's business and legacy are structured to remain intact for future generations. This trust is the only shareholder of the corporation and is also one of the members of the LLC. The LLC is the suggested second layer in the Own Nothing, Control Everything strategy. Establishing a multi-member LLC is critical to ensuring that the entity is not considered disregarded or an alter ego by the IRS. Our recommendation is 3 members: the trust, the client, who will be the LLC's general manager or president, and their spouse or trusted partner, who will serve as secretary. This will make up the 2 to 3 officers of the LLC. We do adamantly suggest 3 officers for both the corporation and the LLC to reduce the risk of impasse when it comes time to vote. The LLC exists only to hold assets and rent them to the corporation. To say it another way, the corporation rents all of its assets from the LLC. An easy third layer can be added for increased tax maneuverability and furthered arm's length protection in the form of a DBA or ABN. And at the core, of course, is the client or individual. So, to break it down, we recommend a corporation for your publicly visible protective layer, an LLC, which is invisible to the public and contracts only with the corporation, an easy third layer that offers even more maneuverability and protection, and the trust, a layer for arm's length control, a tool to ease the transfer of ownership should the need arise, and an integral component in eliminating the pain of probate. You can learn more about this specific aspect as well as the other individual layers, our team, and a deeper look into the strategy by clicking the link we've provided below. This concludes the mapping for our typical organizational structuring recommendation. However, a personalized mapping with one of our knowledgeable account executives may have varying results of what is suggested based on your current condition, future goals, and what you need to achieve them. Structuring is highly important, and in the case of layering, your structures must work in harmony through strategic cash flow. Remember, if there are no asset transfers, there is no strategy. I want to emphasize that because the asset transfers are the key that unlocks the strategy we're talking about today. This is how it works. The client or individual has assets such as home and office furnishings, computers, electronics and related items, tools, equipment and related items, automobiles, and homes or properties. Our trained team of legal processors take all of these assets and transfer them from the individual to the LLC. This asset transfer may include management contracts between the client and LLC, marketing and management contracts between the LLC and corporation, auto and equipment rental agreements between the corporation and LLC, bills of sale for all assets, property rental agreements, HUD settlement statements, installment land contracts, wraparound contracts to carry loan obligations, and the funding of the corporation, LLC, and trust. Once the asset transfer is complete, the cash flows from the public to the corporation, which pays and deducts as business expenses any acquired overhead, including contracted fees to the LLC, as well as the client's once personal expenses like rent or mortgage payments, utilities, vehicle maintenance or repair, gasoline, auto purchase interest, and even credit card interest. Using these contracts, we guide the cash flow from the corporation to the LLC, which eliminates dividends and with them the concern of double taxation. The LLC then pays and deducts property tax, auto tax and registration, and any overhead accrued by servicing the corporation. Even more can be deducted in the form of asset depreciation. Once the LLC has paid its expenses, the cash flows either to the easy third layer for management service provided to the LLC and then to the individual or client who owns the DBA, or it can flow directly from the LLC to the individual. Thank you for taking the time to watch this video today. Please comment below and let us know what you think, ask any questions for clarity, or let us know if you'd like us to reach out to you. Also, don't forget, you can find more in-depth information on the structures, strategy, and team using the links we've provided below.